Perfect. So I think we are now live, so we're just going to wait for everyone else to turn on their cameras and we can get started.
Solo live. כולם שייכנסו.
Perfect. Sounds good. So hello everyone. My name is Kevin Web3. I'm going to be the host of today's AMA. Quick introduction, I am the head of the YouTube channel here for LumiShare SRG, LumiShare SRG now. We have now changed our name, so that's some big news and some incredible stuff. So I'm really excited to be here for the AMA. Of course, I'm going to be the host, so no questions will be asked for me today. They're going to be asked to our guests, Les. We also have our CEO, Ben. We are also joined by David and, of course, Dilip. So with that being said, I'm going to let everyone introduce themselves and then we can move into the questions I have in store for you. So first of all, Ben, can you quickly just introduce yourself to everyone?
Yeah, sure. Hello, everyone. My name is Ben Sharon. I'm the CEO and co-founder at LumiShare SRG. I'm an entrepreneur for the last 9 years. I have an experience with the marketing industry and IT and cyber. I used to represent some startup companies in Israel and open international markets for them for trade and investment. And that's it in general.
Fantastic. Thank you, Ben. Of course, everyone already knows you. So moving forward to our other guests here, Les, could you quickly just introduce yourself? I know you have an incredible background.
That's very kind. Thank you. My name is Les Mail, Senior Director at LumiShare. My role prior to this was as CEO of the largest derivatives marketplace in the Middle East, and indeed my career over 30 years has been in the traditional TradFi, if you like, exchange space, NASDAQ, NYMEX, as well as a lot of energy.
This meeting is being recorded.
Businesses in US and Europe.
Fantastic. Thank you. Now moving forward to you, David. Could you quickly introduce yourself? Oh, you're on mute, David.
There we go. Hi, everyone. David Munoz. I've been in financial services for 20 plus years, obviously originally in traditional finance at a hedge fund, New York, at BlackRock, started a digital bank, and currently CEO of Vectrust. I'm also a strategic advisor to Ben and the team, and very happy to be here with you, Kevin.
Great. Thank you so much. And last but not least, Dilip.
Hi, I'm Dilip Tyagi. I come to crypto world over the last couple of years, like about 2 years ago. Before that, I spent about 20 plus years in the tech industry, looking at all the big names out there. Also working as advisor to Ben and LumiShare.
Fantastic. Perfect. All right. So after all these introductions are done, now we can hop into the questions. So, of course, we all know how the crypto market has been recently with, FTX, Luna, Celsius, collapsing, of course, and a lot of companies trying to introduce new things like proof of reserves. So my first question will be for you, David. Again, we all know how the last year was really tough for the crypto industry. And a lot of people lost a lot of money, unfortunately, because of these collapses and, bankruptcies. So my question for you is really, what were the reasons that these companies collapsed, and what happened really?
I think it's really just a failure of centralization, right? The promise of blockchain has always been about decentralization and operating in a trustless economy. And the reality is that over the past 10 years, the easiest on-ramp for most people has been through centralized players. So the UX for most of the non-custodial wallets for decentralized applications is quite challenging for most people. And so the easy way to get on board, for millions of people has really just been, going through these centralized players. And so the number of the millions of people who've been onboarded to these central players have just afforded those players an enormous amount of leverage in the industry. And for a long time, hid the problems of, poor management, fraud, and other problems that you didn't expect to have in an environment where it should be trustless. But of course, the centralized nature of those platforms meant that you were fully trusting those management teams, and of course, the increase in correlation in assets and the downfall in asset prices has really exposed those problems of centralization. So I think going back to sort of the original promise of a better UX and decentralized onboarding is really the way of the future, which is what Ben and his team are trying to build.
Yeah, and of course, proof of reserves is going to play a huge role in this to really give people confidence moving forward. I know everyone's trust has been broken, but we need that transparency in the industry so that people can gain that trust again. Now, moving forward to you, Dilip. Of course, you know what happened with Luna. This is no surprise to anyone what really happened to its token as well. But the reserves were fully correlated with Bitcoin, which was not good, of course, and other assets as well, like the Luna token, their own token, and even other cryptocurrencies that they were involved with. Now, do you think that this was the cause for their downfall, or were there other things at play here, potentially, like their their staking, their mechanisms behind their token?
I think it's a combination of many things, right? As David was saying, starting with the very fundamental things. If you look at Terraform Labs, they owned Luna was the currency for the platform. They built the USG that was pegged against Luna. They built it on the Anchor protocol. So it's like a centralization that happened across the board. Then that gave them the enormous power without having all the right checks and balances in place. Although we call it more transparency and decentralized and trustless, but in this case, what you are seeing is kind of lack of good corporate governance. You're looking at lack of good transparency. Something that when you think of the afterfall, how it has impacted many other industries, including very recent FTX, is that you are trying to leverage assets from one class into another class without having the right mechanisms in place, controls in place, the kind of the disclosure that you need to do in the current markets, money markets. And as a result of that, when the peg was lost, like if you go back to the, it was not that far away that the USD and Luna were pegged. And once they lost the peg, everybody jumped in to cash out the USD for Luna. And then there is a more severe pressure. And altogether, I think it was about $300 billion lost out of Bitcoin. So the concept of building the arithmetic stable coin that's pegged to your own currency, that's working on your own protocol, which is again built on your own primitives, is where the actual problem happened. The proof of reserve can help by bringing some of the transparency, but some of it is just the basic good hygiene practice, the good corporate governance, good disclosures in place. And at the end of the day, in a trustless world, in a decentralized world, you should not have so much centralization and power given to one individual. And unless and until we clean some of these things out, I think the FTX debacle is the most recent one that has burnt more people in North America, is probably going to drive some of those expectations going forward. That what are the mechanisms that you're building to provide that liquidity in case of the liquidity crunch situation? How you're providing the proof of reserve. Another worst thing about the Luna and USD is they were providing about 20% plus APY. Some of those high yields that are not possible without having something like a Ponzi scheme going on in the back. So I feel because of some of these failures, the market is much smarter. People are expecting more. They're asking for more. And going forward, we should expect some of these things to take the central stage, and people are investing wisely when it comes to looking at the actual assets and what is behind those assets to price them accordingly.
Yeah, great answer. Thank you so much. David and Billy, fantastic answers. Thank you so much for that. Now to you, Ben, of course, every asset class or almost every asset class has been taking a hit this year. Everything's been going down. But do you believe that there are any further causes for the crypto market to keep crashing?
So beyond the great answers that David and Dalip just said, I believe that there is another cause. I believe that because the last 2 years, we identified that was a correlation between the stock markets and the crypto market. So I believe that it's created by the result of the fact that some of the major players who are in the stock market was entered to the crypto market as well. So once the stock market dropped sharply, it was the same thing on the crypto market because it's the same smart money. Beyond that, in my opinion, I think lack of corporate governance. As you probably know, the basic principles of the corporate governance are accountability, transparency, and responsibility. So good corporate governance leads to ethical business practices, which leads to financial viability. So again, in my opinion, after FTX and the other made exactly the opposite, it was one of the major reasons to the market crash.
Fantastic. Yeah, and even to add to that, personally myself, I think, as interest rates just keep going up, that will definitely not help any asset class, unfortunately. So let's move forward to our next subject here, which is, of course, just speaking about the traditional financial systems and the current situations that they're in right now. I'm going to move this question to you, Liz. As for your experience in, of course, the NASDAQ and in general, the traditional global financial markets are experiencing negative fluctuations. Now, what are the reasons that have caused this high downward volatility in the financial markets in 2022?
Thanks, Mal. It's somewhat depressing to still refer to COVID and the pandemic is one of the two headwinds that I would report on, the lack of performance there in markets in generally, mainly because of the slow recovery in the Far East and China in particular, which is causing a drag on commodity demand. Additionally, of course, we've got the Russian invasion into Ukraine and the onward energy crisis that's had within Europe and the UK and the recession that those countries are in. But the key point here, I think, is when you're looking at markets, they will factor these in. These are known events. So the markets don't tend to behave quite so well with sudden changes and sudden shocks and volatility. But these issues of COVID, the pandemic, China, the ongoing war in Ukraine, as I say, these are now factored into the markets, such that if there is a more positive turn of events during 23, then I think the markets will react quite quickly and an uptick well. That's not going to happen, I think, until we've got the winter out of the way. Most notably, of course, because of, as I say, the energy crisis in Europe. But I'm more optimistic than perhaps some observers on the recovery of the markets during 23. But of course, and I know we might touch on this later, gold will still remain a safe haven for assets storage.
Fantastic. Thank you so much. Moving to you, David. Of course, you have a lot of experience with BlackRock and some of the biggest banks in the world. What challenges do traditional financial markets face, especially right now?
I think you have to look at the economy right now, because the economy is really what's driving markets largely. So you have to break down the economy into 4 different quadrants: inflationary versus deflationary, boom versus bust. So you can have inflationary boom, inflationary bust, deflationary boom, deflationary bust. We've been through a deflationary boom for the past 10 years. We briefly went into an inflationary boom, about 16, 18 months ago. And then we started moving into an inflationary bust probably about 3 to 4 months ago. And so the real question is, are we going to move back to a deflationary period? Are we going to move to a boom period? And I think the answer to that is that, most of the inflation that we were seeing in the prior years was really supply-driven inflation. That's largely moved into a services type of inflation, which is very sticky. And so therefore, I think we're going to continue to see higher levels of inflation than you would normally expect, even with year-on-year comparisons. And I think that the problem that the Fed has is that you're going to continue to have inflation in a period where the economy is busting. So you have this problem of trying to thread the needle between boom and bust, all the while trying to fight inflation. And so we're not going to go back to a deflationary period. So that I think most people who know markets can agree to that. So we're going to be in an inflationary period. And so the real question is, what is the Fed going to do in the face of that bust really accelerating over the next 6 months? And the reality is that in the past, they have been very reactive. And now, because they've made so many mistakes over the past 2 years, they're probably going to delay any change in decision making. So I'm a little less optimistic than Les. I think that you're going to see, quite a lot of pain in markets as they digest how long the Fed is going to be on the brakes. And then the reversal that's going to come is also going to be dramatic, but it's not going to reverse to a period where you're going to move into booms. We're going to be in this oscillating period over the next few years where the Fed is trying to fight that, very strong inflationary force that's going to be with us for a while.
Yeah, great answer. Thank you both again. Fantastic answers. I hope that provided a lot of insight for people on the live stream and whoever's watching this recording after. Now, moving forward, obviously, we are going through a digitalization era. So for you, Dalit, my question is just to quickly explain what digitalization is. And of course, in our scenario here, in our situation, we're always in the crypto space. So how is it related to the blockchain, and how does it affect the lives of, businesses and people around the world in recent years who may not even be in the crypto space? How is digitalization really impacting everyone?
Yeah. So first, digitalization is not a new concept. It's in market for almost 30, 40 years now. Started with the mainframe, going into the PCs. And what digitalization is you have set of processes that you need to follow, right? You have to build a car. You have to work with your supply chain, with your vendors. You need to have the transparency into your supply chain. And you have to look at your inventory, both at the component level, at the car level, at the distribution level. And over the last several decades, the digitalization is happening. And you have to look at the endpoints, how people access it. So there's a big infrastructure at play, and then how people or businesses leverage those access points, from mainframe to mobile to now everybody can do it on the phone. So now everything was, again, very centralized into the centralized processes, not a tons of transparency. So what is happening with blockchain? That blockchain provides you with a double ledgering system, right? So it has the kind of the trustless environment, trustless properties, but those are the properties that provides it more transparency. So what you are able to do, and it also creates many other opportunities that were not possible before, like the creators economy, the value-added services that can be added across the way. So when you look at the digitalization, just continue on to the momentum that has been started a couple of decades ago. It may not have touched every single industry, right? It did not enable every single scenarios. With blockchain coming into pictures, with the technology that we have at our disposal, it's allowing us to do some of those things that were not possible. It's allowing us to do it at a much lower cost than it was possible. And it's giving the ownership, whether it's the users, consumers, businesses, back into their hand through the decentralized process. So not everybody is going to rush back into the centralized process, like let me buy a SaaS platform and build it, but you can have the protocol and you can modify it to fit your needs. So the next several years, I see the more and more people joining the blockchain, not only in the DeFi space, but the DeFi, your customer relationship management and your supply chain management solutions, and so many different things that are not possible today. And one of the more interesting things that are coming in this space is also the zero knowledge, right? Where you can see the fundamental things that you need to see. For example, like, if we want to see Ben's age, we don't need to know the actual number, right? But is he allowed to drink beer? That means, depending on the country, it's like 18 or 21. So he can qualify without exposing all the data. So that means you can have the more transparency, more controls at your hands, lower cost, and while still preserving the privacy of the individuals and businesses. So this is what I think that gonna bring in more and more users into the digitalization driven by blockchain, and it's gonna improve the efficiency and transparency for everyone.
Yeah, I think that's a great example that you gave me there. Ben being able to prove something without having to provide information that's not relevant. That's a really good use case there. Moving forward to you, David, how has digitalization affected banks, and what's going to happen moving forward?
So I'll just echo what Dilip talked about, right? It's, on the one hand, it's a services question, and on the other hand, it's a cost question, right? So digitalization, whether that's, what fintechs are doing or blockchain, it's all wrapped into the same, sort of aura of how do we provide better services to consumers or to businesses, broader services, faster services, cheaper services, right? And so that's one side. The other side is, well, we're automating so much of the processes that previously were manual that the cost structure of the banking system and the financial system is reducing dramatically. So from a valuation perspective, that should improve valuations for financial services businesses. But if we just apply it to blockchain for a second, just to give a concrete example, let's look at, let's talk about ID. As Dilip was talking about, you can have sort of zero knowledge ID transfers in the banking system, where you can move from one bank to another, and all your KYC and AML travels with you with zero knowledge. You could think about the payments. Right now you have a tremendous amount of money that's just stuck in the system in the form of float that banks make a ton of money on, particularly today when interest rates are high. They weren't when interest rates were zero, but they are today. And so banks love that. But as we move to a blockchain-based payment ecosystem where it's instant settlement, well, all of that float goes away, which basically means that you're going to reduce the working capital for a lot of businesses. You're going to increase the velocity of money for individuals, and you're going to release a huge amount of liquidity into the financial system. So when you talk about, for instance, a QE and what the Federal Reserve and ECB were doing, Bank of China, et cetera, they're generating a huge amount of liquidity by printing money. Well, the same thing is going to happen when payments go to instant settlement. All of this liquidity, which is trillions of dollars, that's basically in float, is instantly, well, it's not going to happen instantly, but it's going to happen over a short period of time, is basically going to flood the system, which basically means that you're further going to fuel inflation. So reduce working capital, increase velocity of money, and increase liquidity in the system means much more inflation.
Yeah, great answer. I also have another question for you, David, just a small one. How do you feel about banks providing that transparency with the blockchain technology? Do you think that's something they would not want to do since they're so, private?
Well, certainly they have an incumbent interest in preserving their revenues. So whether you talk about Visa or MasterCard, or whether you talk about the banking system, all of them benefit from float. All of them benefit from transaction fees, which blockchain should, blockchain will release the float, and blockchain should reduce transaction fees. So, of course, as incumbents, they're fighting that sort of natural tide. That's, and it is a tide, right? You can't fight the tide. It will come. You may, put blocks up, but those rocks will be moved. But I would also say that it's interesting how engaged, financial services, whether it's Visa or MasterCard or JP Morgan or all these businesses, are in investing in blockchain entities, because they, for them, it's just an option, right? They're just putting money out. It makes really no difference on their balance sheet, right? For them, it's just about the option to participate in the transformative power of one of these businesses. They don't know which one yet, but they know it's going to be one of them. So they're just putting, chips out on the board and saying, I'm going to win with one of them, and it's going to help me to preserve the revenues and cash flow in my business.
Yeah, well said. Thank you. Moving forward to you, Les. How does the digitalization affect the commodity market? I know your background is perfect for this question, so would love some clarification on that.
Yeah, thanks, Kevin. I mean, digitalization is not new, and it's been in the commodity markets, entire career from my career from the 1980s, moving from the classic open outcry pit trading to screen-based exchanges, but particularly through what would have been called in the 90s straight-through processing. So digitalization in itself is not new, and I think for position book accounting, it is largely efficient. What is inefficient, and echoing what David was saying, is on the payment and settlement systems provided by the central and clearing banks. They are horribly inefficient. They're still based on SWIFT. Equity commodity markets are D+1, D+2, D+3 settlement timeframes, which are just horrendous. And I think where we will see change, and why some of those banks, the Wall Street banks, if you like, will start adopting blockchain technology more, is because there'll be such demand from the retail investor, from their customers. The retail investor, particularly experienced through lockdown, the idle thumbs, if you like, has demanded the need for much swifter, faster, and more accurate payment services, and that retail demand is showing no signs of going away. So I think that will provide an ongoing tailwind for those banks to adopt blockchain. And on commodity markets in particular, a distributed ledger of a proven provenance of where a particular raw material came from and how it's being traded through the supply chain. Yes, I mean, I can see that being of benefit for the physical commodity markets. So particularly for payment and settlement services and say blockchain provenance, those two would be examples that I would pick on. But the digitalization in general of markets, generally speaking, has been ever present anyway.
Fantastic, thank you. Moving forward to you, Ben. How will blockchain play a crucial part in the world, which is of course increasingly being driven by digitalization?
Okay, so let's start from the basics. Digitalization essentially means to enable businesses to streamline processes and even access data online, while the blockchain is providing a secure, better, and efficient way for businesses to store and transfer their data. In fact, let's talk about 2 years ago, the COVID has increased the digital penetration across the world. So now a lot of people around the globe are using the internet to manage their bank accounts, order different insurances, goods, and invest, etc. So I believe using the blockchain technology is an important part to build the digital world of the future, will increase transparency and trust in businesses. So, for example, in the world of finance, blockchain technology can be used to create more efficient and even trustworthy payment systems as compared to the traditional and the exist today.
Thank you. Perfect. Moving forward, as you mentioned earlier, Les, I might ask about gold. Of course, I will be asking about gold now. So, of course, everyone knows gold the asset. We might wear it, we might store it, and some people might buy it as a hedge against volatility and inflation. So my question for you, David, is, in your opinion, can gold really be used as a hedge against inflation and, of course, volatility, or is that just something that people are totally wrong on?
Well, let's talk about gold as an inflation hedge, and let's just go back to that paradigm that I talked about in terms of inflationary booms and inflationary busts. Between those two, there's a spectrum. Gold is a very good inflationary hedge in inflationary busts, and it's a decent inflationary hedge in inflationary booms. Over moderate periods of inflationary periods, it's an excellent hedge. But again, better in busts and not as good in booms. Why is it not as good in booms? It's not as good in booms because there are alternative businesses, equities, or private investments that you could make that generate significant yield that could offset some of that inflation. But in inflationary busts, there are much fewer opportunities to invest where you could offset that inflation. So people tend to gravitate toward gold. Now, you read, many times over the past 12 months, well, why hasn't gold served as an inflation hedge over the past 12 months? Well, the reason for that is it's a short-term period. And in these short-term periods, when you have asset collapses like this, you also have deleveraging events. There are many players in the market that are deleveraging. And what they do is they liquidate some of these assets like equities or like gold that they may not have leverage on to pay back leverage in other asset classes where they do have leverage. And so in periods like this, particularly where we were transitioning from an inflationary boom to an inflationary bust, gold has not been a great hedge over the past 12 months, but I think over the next 24 months, you're going to see that gold is going to be a much better inflation hedge as we move further into the bust. And that deleveraging gets flushed through and out of the system.
Fantastic answer. Thank you so much, David. That was really good. That personally gives me a lot of insight as well for the future. Now moving forward to you, Les. What advantages does gold possess? And of course, with your background, why are experienced people eager to buy it amid, a crisis?
Well, I think you have to look at some of the fundamental reasons why people would buy gold. And echoing what David's saying, he didn't use the word boring, but gold is a stable influencer, if you like, leveling out those peaks and troughs, if you look at its historical aspect. So people will buy gold sometimes for religious reasons, sometimes for family reasons, whatever it might be. But as a hedge, as a long-term hedge, without exposing yourself to those peaks and troughs, it is ideal. One might query why the market price doesn't move more than it actually does, and I think it's largely because of inefficiencies in the way that the gold market is run by, let's say, 4 banks, and there's been some interesting legal cases in the US if people wanted to look at price manipulation that's been proven as well by one of those banks. So I think there's an ongoing demand for gold from the demand base. And particularly because there's this emotional attachment to it. It does have that sentimental value that people will buy and hold and keep for a long time.
Yeah, great answer. Moving forward to you, Ben, of course, in regards to LumiShare, why did you choose the combination of the gold standard and cryptocurrency at LumiShare? What really inspired you as well for that?
So from the dawn of history, the gold has been the most reliable and stable store of value, as David and Les just mentioned. But as for now, most of the people in the world are not really identified the real value behind the crypto. So if we will go through the history, until 71, United States economy and the dollar was backed up by physical gold, which prevent from the inflation to rise up like these days. So in our opinion, as for our simulations as well, the combination of the gold standard and cryptocurrencies has the potential to provide stability and security for the global financial system. This combination could provide stability and security while also allowing individuals to make secure and efficient transactions. So we want to combine between the past, what already worked, prove as something that worked, with the future, the blockchain. We believe that the combination between them will bring a new era for people money.
Fantastic. And I guess it will give people that confidence knowing that what they're holding is backed by something real. Of course, not to say that the token is not real, but it's a physical asset that's physically real. Now, moving forward, the gold rush of 2023, that's, something that people have been talking about. And of course, the financial markets have been going wild and people are trying to predict what's going to happen to it. Personally, I'm bearish on the markets. So my question for you, Les, is, recently we've heard about a lot of experts who've claimed that 2023 will, usher in an even stronger, collapse in the market and even the collapse of several banks around the world. And, a lot of people have been saying, and experts have been saying, that the smart people will be, buying into gold and these kind of assets, like even cryptocurrencies. What's your take on that? What's your opinion?
Well, I think I've already sort of revealed my hand a little bit that I am mildly bullish. I don't see the bear market continuing ad infinitum. I think it will be a very slow recovery. We've got a very slow recovery for sure. But the fundamentals are still there. We know, talking about FTX, that there's nothing wrong with crypto. The FTX failure was what we would talk about in financial exchanges as commingling between the house and client collateral. And no doubt some of the errors in corporate governance, something else we've mentioned today, no doubt those errors will make a Hollywood film in due course. Yeah. So I think the reasons driving gold and crypto will remain. I don't see a wholesale decline in markets or major banks failing. One hopes that isn't the case, of course. I think there will be a recovery, but it will be slow and somewhat stumbling. Yeah,
good points. And mentioning the film about FTX, I think that's going to be a blockbuster film. Hopefully one day, I think. At least something good will come out of that. Moving forward here, I have a question for the entire group. What predictions do you have for 2023? And the second question after that, what does the future hold for the crypto world? And then the third question is, will the bear market persist, or do you expect maybe a short bull run in the near future? And I'm going to start that off with Dilip.
Sorry, it took me a second to
take myself off
mute. I'm more in the Les's camp. I don't think this is going to be a big bear market. I believe that some of the things that are happening in the marketplace, which is disruption in the supply chain, more centralization that has happened over the last 20, 30 years. I try to tend to think in a very simple terms, which is demand and supply. And the third coefficient that's getting added into it is the transparency. And the transparency into the financial market, transparency into the supply chains. Even if you look at the very recent things that have happened over the last couple of days, particularly in North America with the 3,200 cancellation of flights only on the one day. I think the world is moving towards, getting more decentralized. And this is because I'm coming from the industry, coming from the tech background, I feel more bullish on that. I think the demand and supply curve hasn't. The supply has tightened, but demand curve hasn't fallen back. The demand is relatively still strong. The job market is relatively still strong. So I'm not seeing it going the other way, at least in short terms. I think once the supply kind of picks up, which is both the supply plus the transparency into the supply. I think when the prices go up, half of it is driven by the emotional reaction and half of it is driven by the actual changes that happens. So when I look at 2023, the more transparency that comes into the market, I hope the peace prevails, because that has some fundamental impact that is driving a little bit of our, at least the American relationships when it comes to Russia, when it comes to the OPEC. So once some of that supply kind of gets eased up, the peace prevails, we get more transparency into what's happening with China. Hopefully the COVID does not make a big comeback again. I am hoping that this is going to be a slow recovery with maybe some bull runs, short bull runs, but I'm more on the positive side than on the bearish side.
Perfect, thank you. Moving forward, I'm going to pass it on to you, Ben. I know you cut out, but you're back. Thank God. There you go.
Yeah.
So yeah,
I was purple for 2 minutes. I don't know what happened to my laptop camera, but now it's fixed.
Yeah,
I'm connected via the iPad. So about my predictions for 2023, I will go back to my first question that I mentioned about the correlation between the stock markets and the crypto markets. I believe that this correlation will disconnect in about 6, 7, 8 months from today, or even less than that. So until now, the correlation was made because of the big players, the major players from the stock markets that joined with the crypto market. So I believe once it will disconnected, the crypto market, the bull run will come back, and I think it will affect all the market, all the crypto market. So my prediction specifically for the crypto is at least 6, 7, 8 months from today, we will see a huge bull run. I'm not so positive for the beginning of the next year for the general financial markets. I believe that some of the banks will crash. I believe that even the real estate industry will affect it, and it will be like a domino effect. I'm sorry to be such negative, but that's my beliefs. But after 6, 7, 8 months, I believe that the crypto will come back to the bull run, and it will be extensive.
Good point that it's like a domino effect, because that's really how it is. Nothing crashes all at the same time. It takes time for things to spread through the entire market. So moving the question to you, David.
So I would say that in the last 100 years, there have only been 2 or 3 years where you've had consecutive down years in the financial markets. So with that said, it's really a question of the path and not kind of the end point of the year. So I think that you'll probably see a modest upturn by end of next year, only because balance sheets are so strong, right? Consumer balance sheets are strong. Bank balance sheets are strong. Corporate balance sheets are okay, not great, and many will fail, but nothing that's systemic. The path to that, to that sort of moderate performance in 2023, I think is going to see the first half being quite difficult, particularly in the face of that Fed, being sort of, sitting on their hands for so many months and feeling as though they really need to nail inflation, put inflation to bed before they can let up. Of course, markets discount and anticipate, the Fed action. So you'll probably see something toward the second half of the year in terms of outperformance, but only because we're not in a truly dire situation from a fundamental perspective. I think from a crypto perspective, I think you're going to see much more rational decision making in terms of VC funding for new projects. There's going to be a lot more focus on utility and true value that's being created in the marketplace, both for customers and clients of crypto businesses and for the investors of the businesses. And I think that the response, I think also the users are going to demand that as well. They're going to demand, easier UX. They're going to demand better utility because, that's really where the promise is. And so I think businesses will respond to that, and you'll see, I think you'll see a tremendous sort of renaissance, in 2023 in terms of the number of businesses that provide, true practical utility in the marketplace, which I hope will then catalyze interest in blockchain space again, and we can kind of put the problems of 22 to bed.
Yeah, great answer. I really appreciate everyone's answers. Of course, Dilip and David, thank you so much. Now, moving forward to you, Ben, could you speak about the uniqueness of your asset-backed NFT marketplace solution?
Yeah. So we have some very interesting and unique features that we believe. First of all, I will start from that. We believe that the future of the NFTs are not with the JPEGs or the pictures as it was for the beginning. I believe once you will tokenize real life assets and you will combine it with this technology, it will affect the lives of most of the people in the world. So as for your question about our uniqueness in our asset-backed NFT marketplace, first we have the no-code module, because right now if you want to generate an NFT collection, you must have development skills or to hire a developer. And using our platform, it will be simple to use. Everyone can generate their own NFT collection without the use of any single line of code. Beyond that, we have the anti-fraud system, which OpenSea, the biggest NFT marketplace in the world for now, 4 or 5 months ago announced that more than 90% of the NFTs are scams, are frauds. So we built our own anti-fraud system to prevent from the scammers to upload their scam into our platform. And beyond that, we will start from the world first green and sustainable NFTs, tokenizing of renewable energy assets, and then move to the 3 other categories after we will achieve our KPIs, which are the agriculture, gold, diamonds, mines, and lastly, the real estate.
Perfect. Obviously, 2022 is getting, to the end of its days here. We're shortly moving into 2023. Could you just give us, and the audience a quick rundown of what happened and what achievements LumiShare SRG has achieved, and anything important you'd like to share?
Yeah, of course. So it was amazing year. I would like to use this advantage in target to thank all of our amazing partners, amazing team members, which made their best in target, done their best in target to help us to implement all of these achievements. So first, I want to say thanks to our amazing partner from the royal family of Abu Dhabi, His Highness Sheikh Mohammed bin Ahmad Al Nahyan, which helped us to implement our vision and also invested in the company $2.2 million that added to the investments. Beyond that, of course, about our great team that consists of top experts from the fintech, the blockchain, and the global banking industries, like, of course, the people that are here with me right now, David, Les, Dilip, and of course, all the rest of the team. We have an amazing team right now, like one big family, super experienced people. Beyond that, we were chosen as the most innovative blockchain ecosystem for 2022 by Entrepreneur magazine, and one of the 20 most promising companies in the world by Global Business Leaders magazine, and another amazing rewards. The last few months, I was traveling all over the world. I was in Africa, in Paris, London, Singapore, here in the UAE, Abu Dhabi, Dubai, in target to spread the vision of LumiShare SRG all over the world and target to meet some interesting people that will help us, that will support us. That's it. In very, very, very generally, we are cooking a lot of new surprises, good people that are going to join us that I can't reveal right now.
Yeah, that's fantastic. And I would like to add and say that all this is happening during the bear market too, where a lot of projects are either failing or just giving up. LumiShare SRG is building and growing, so it's just a even bigger accomplishment in my eyes to do all this while we're in this bear market where money is flowing out of the crypto space. So the last question I have for you is, of course, we spoke about 2023. What can everyone expect from LumiShare SRG moving into 2023, especially the first quarter?
Yes. So first, we will keep building. We will focus on the building, and on the first listing phase, we will start the first listing phase on some of the biggest tier one centralized exchanges and decentralized as well. And then the second quarter, we will publish the first version of our asset-backed NFT marketplace with the renewable energy category. And as I mentioned, we will keep building and we will start our education plan all over the world. We already arranged some online and offline events for the education for free. We will educate about blockchain in Nigeria, in Egypt, in Dubai, in all over the world. We have right now more than 8 events for free that we will teach blockchain, the principles of the blockchain, etc. So that's in general.
Fantastic. Okay, now for all the speakers here today, starting off with Les, we're coming to the end of the live stream here. Is there any piece of advice or any thoughts you'd like to share with the viewers?
Thanks, Kevin. That's a little bit tough one. Single piece of advice: always go with the fundamentals. Forget the spin, forget the marketing, get down to the basics. It might be boring. We've touched on things like corporate governance and payments and services, the need for sort of a regulatory ecosystem. Always search for the fundamentals.
Fantastic. Thank you. Now moving forward to you, David.
I would just say get in the practice of reading white papers. The more you read, the more you learn. And you can learn a lot about how a business is structured by reading the white paper and understanding if it's well thought out. And then, beyond that, just do what Les is saying, ask questions, do your research.
Yeah, and the same thing, for the stock market, I guess, not white paper, but SEC filings, that's another great thing to go through as an investor. Thank you for that answer. Now for you, Dalip, do you have any piece of advice or any thoughts you'd like to share?
Plus one to both, what has already been said. The last thing I would say is experience. When you think about the new technologies that are coming out, experience them firsthand, because that gives you an experience, right? The UX, the efficiency gains that you can have. There's so much was discussed during the last 30 minutes or so. I think don't stand outside. So do your research, look for the fundamentals, and just experience things, the products and services, the companies that you want to invest in, just experience their products. Go play with them on your mobile phone if it's an app. Go think about how it is going to change what you already have. What we know is there are few fundamental things that always works. The things that improve efficiency, the things that cut costs, and things that reach more number of people. If the things that you're investing is providing one of those three things, you will be in good hands.
Fantastic. Thank you. And to you now, Ben.
So I totally agree with David, Dalip, and Les. Don't go with the trends. Do your own research. Don't be reckless and learn from the failures, especially failures and the mistakes of others as much as possible.
Fantastic. Perfect. And I'm going to wrap up the live stream here. And my quote that I would just like to add to this is just be greedy when people are fearful. Of course, Warren Buffett, his quote. So just going to end it there. Thank you, everyone, for joining. I really appreciate your answers, your time. Tremendous insight you guys have given me today, and of course the audience as well, and they're very grateful for that. And we're very happy to have you guys on board, part of the team. So again, thank you again, and that's going to wrap up the live stream. So we'll see you guys all in the next event, everyone. I hope you guys did enjoy this live stream. If you did, make sure to like this on whatever platform this is. LinkedIn, if this is on YouTube, make sure to like and share it with your friends and family. So for today, that's going to be it. Thank you for joining, and we'll see you in the next piece of content. Bye.